Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, guys, good morning. And yes, like you just saw, make sure to check out DNA Funded if you have not already. The link just got dropped in the chat for you. And there's some nice discounts available. If you use that code A1T20, write that down, you get 20% off. Not a bad deal. Okay, markets here moving this morning. You've got gold pretty much flat. You've got Bitcoin a little bit lower. I took a Bitcoin trade yesterday, not looking so hot. Might need to retry that idea. Stocks lower here this morning. Got S&P 500 down off 1%, rejecting so far this area of resistance. We've been talking about this level as the decision point. So far, sellers still be in control, but the day is young and these market moves have been really volatile. We'll see if buyers can kind of take a stab back higher today, or if this truly is going to roll over again. And see the lows. You know, I've made my prediction. I'll stand by it. I do think that this could be the low before that April 2nd date. I may be wrong. And that's the thing about markets is, you know, sometimes you're right, sometimes you're wrong. It's about what you do, how you handle when you are right versus when you're wrong. That being said, let's talk about price action for the S&P just for a second. If we're going to see the bulls hold it, now it's the bulls' turn, right? So we just talked about the bears. Bears, they had this kind of key spot. Can you hold resistance? Can the sellers back this thing down as buyers kind of push this up, right? And what we've seen so far is it seems that they can at least hold this 57.20 area of resistance. But now you've got your next kind of leg lower. On the daily chart, we found a bit of a stronghold around this 5,600 level. The question for the bears now is that if you're really going to see bears take it, right? We've got 2 key levels. Now we're really chopping into consolidation. 5,600 needs to be taken by the sellers. And of course, that previous low around 55.20. So we'll see if bears can take it. I, like I said, have been clear, and I won't change my opinion just because it's convenient. I think that this market is in the process of bottoming out, but maybe I'm early. Maybe I'm wrong. Too early to call. And again, we'll see how the price action plays out today. If you get bulls holding this area, right? If this thing bounces, we're just back to this. Bulls, you got to prove it. You got to break this area here. I have no short-term trades open on the S&P 500, NASDAQ, or anything. I have no positioning. I've been pointing out that I'm just waiting for this level to break in order for that to be some kind of bullish signal for me. So I'm interested in being long the S&P 500, but I have no current positions at this time. Okay. Good to see everybody, by the way. Thank you for being here. Good morning, good afternoon, wherever you are in the world. I hope you're doing well. Hope you're trading safe in this market. With the VIX up 7% today almost. Still got some volatility in this thing. VIX spiked up to 29.5, and many traders may or may not know this, but today is, to my knowledge, the biggest Opex day, options expiry, in history. So the options closing out today, expiring, is going to be massive. And now, why I bring that up is that Opex days like this, especially big volume ones, typically get a surge in volatility, right? As kind of those options are coming to an end, as people are rushing to close out positions or, you know, finalize their options trades. A lot of people forget about how big the options market is. It really is a huge portion of the speculative market out there. People buying, I mean, nowadays you've got 0 DTE, that's days till expiration options. People can make a bet on where the S&P 500 is going to reside by the end of the day. Options is a crazy volatile space, and it is not for the faint of heart. Options are very volatile. So S&P 500 down off 1.1%, Nasdaq 1.3%. So here is transparently where I'm at with this. From a trading perspective, I want this thing to break out. From an investing standpoint, I want this thing to break down. It's a weird kind of like internal conflict that I have with it, because I'm like, oh, I'd really love to get some long trades going. I think that has a high probability I could, put a tight stop and try and ride this thing higher. I love that line of thinking. But from a long-term perspective in my portfolio, when you give me stocks 10% off, right? You start looking at stocks 10% off, and oh my goodness, if you start going into 15, 20% off, this would be, in my opinion, and it's not financial advice ever on this channel, that would give you a phenomenal longer term entry on some of the stocks that you might like, in my opinion, right? So like when I look at this, I say, look, S&P 500, give it to me, right? Give me that kind of sell off, and I have to go shopping, right? I have to. That's just what I do from the long-term side of my portfolio, right? From the short-term portfolio, if you break this low, we got issues. Momentum is favoring the bears in the short run, right? So there's two sides to this. From an investing standpoint, please break it, right? From a trading perspective, that would be short-term bearish, and I'd probably have no interest in trading on a short-term basis the S&P 500. Okay? I'm only looking for longs. The reason I'm only looking for longs is because my system is kind of hovering around bullish signals. We're not getting any bullish signals, and this has been a wonderful filter. So we talk about often with your system, whatever you are trading. Look, whatever you are trading, whatever style of trading you do, whatever sequence you use to find positioning, whether it's the edge finder, something else, or your own system, whatever. Having a filter on price action is beautiful, because if you see right here, these -2 scores have been filtering out NASDAQ and S&P 500, keeping me out of the way of the downside move. Other things are pointing bullish, right? Inflation data was actually much better than expected, much better than feared last week, right? COT data shows institutional money is buying the dip. Retail positioning shows retail investors are scared. Seasonally, it's a good time on a historical basis to start looking for longs in the S&P 500 and the NASDAQ. So I have a lot of bullish signals, right? But why am I not in a trade then? Price action and trend are not agreeing with the fundamentals at this time. Does that make sense? So it's kind of like a checks and balances system that I use within my trading. The sentiment analysis, very bullish, right? Institutional money is getting long. Retail traders are buying puts and super scared on the market. Okay, that's super bullish. But the timing of it is where the technicals come in, right? Looking for the timing of the entry. If the technicals look perfect, but the other things are no good, there's no trade for me, right? Technicals can be deceiving, in my opinion. I like to add technicals as kind of the icing on the cake, if you will. So I'm missing the technicals on the NASDAQ and the S&P 500. The technicals are just not quite there. Now, what I'm looking for, as I keep saying, and the reason that I keep honing in on the S&P and the NASDAQ, I was paying very little attention to them over here. They were choppy. My system was not giving me very good signals at all around this area. And, it started to flare up like, okay, we're close to a bullish reading. What are we missing? The last piece to fall in the edge finder is the technical breakout, the trend to flip bullish. Does that make sense? So I've been on the sidelines heavily for the S&P 500. I don't personally, within my system, have a reason to be long. or have a reason to be short, right? Again, that is why I think that within whatever you are doing, you may do something completely different than me. But having a checks and balances, a system that waits for confluences to line up, can significantly improve your trading results. And that's the reason that I've built kind of the way I do what I do around this idea, right? I want to wait for confluence between technicals, sentiment, and the economic data. That's my three parts. When they all fall into place, oftentimes that's where I find the really nice trading setups like gold, right? So I'm long gold using the exact same principles that I just discussed. I may actually get taken out for a profit here pretty soon. If support breaks here today, we'll take profits. I would be fine with that going into the weekend. But we'll see. Might bounce off this area. But I've been long on gold since March 3rd. Edgefinder gave me a bullish confirmation. Technicals looked great as we pulled into this area. And what I really liked about gold at the time, you can see I didn't catch the bottom, but after we saw that rejection off of these lows, held support, I went long, put a stop below, and it just kind of never came back, right? It just has been going and going, and I've trailed stops several times. And, the reason I trail stops is just because, when you get these really nice runners, it can be really great to just stay in the trade and continue to hold. So I've been sharing this trade in the Discord, and I do have my stop loss trailed on this one. Let me see if I can pull that up here. So, like I said, trade update on this one is basically I've just trailed my stop loss using the 4-hour chart. My stop loss is at 3,015. And there's nothing for us to do on this one, right? So if you're in gold, congratulations. If you're short gold, it's been a tough ride, and it's been rough. So if you're short gold, it's been tough. If you're long gold, it's been really, really nice. Just riding the fundamental trend, riding the technical trend, and that's what we do on this show, right? We talk fundamentals and we combine that with price action to find high probability trading setups. That's the idea. Does it work all the time? No, nothing does, right? We take losers. We take wrong ideas too. Every trader does. But I continue to hold the gold trade. And plan is, like I said, I've updated my stop loss in the signals room to 3,015 an ounce. If this breaks, we take profits and we move on. If this holds again, which this would be, man, I don't know, 1, 2, 3, 4. This would be the 5th time we hold this area. If that happens, then we're just going to continue to trail stops. But we'll see. This is a pretty key area for the bulls and the bears who are watching gold on the 4-hour, the 1-hour chart. You've got a really big area of support here. And the reason I've got my stop loss here is because I think that if you break this, if you get something like that, then I think there's a good chance that gold will finally give some reprieve to the downside, right? We've just been in this perpetual uptrend. That doesn't go on forever, but it can go a lot longer than you think it can. Like we could, I am by no means bearish on gold. Like we could just be consolidating here and then boom, we go up another, 50 points on, or, $50 an ounce on gold. The nature of gold is just when you think you've timed the reversal, it does one of these candles, right? Jumps up $40 an ounce or something like that in a single day. So do I think that's necessarily going to happen? It could. I would say it's more likely to keep going up than it is to go down, which sounds crazy because a lot of times people get it in their head that like, oh, this is stretched. That means the longer it goes up, the more likely it's going to go down. And those are some famous last words in trading because a lot of times momentum just keeps it running and running and running. But with a daily candle yesterday, a little bit of indecision, some follow through to the downside today, I'm cautious on this position. And like I said, stops are locked. We're going to take profit if it breaks. And if it keeps going, tell you what I'm looking for. Let's just say that today bulls hold. We're going to go probably back to that resistance. And then we're back to, again, programmatic thinking, systematic thinking. If this were to happen, we'd say, can this thing break? And if so, any sort of higher low, we rinse and repeat what we've done a couple times now. We trail stops below structure and we go onwards and upwards, right? What time are you announcing a winner for Edgefinder? It will be shared in the Telegram. We got a team behind the scenes who's keeping an eye on it. By the way, speaking of, today is the last chance to join the Edge Finder giveaway. I think when I last looked, we had like a couple thousand people or something in the list. But if you have not joined, here's a chance to throw your name in the hat for a chance to win the Edge Finder completely for free. We'll drop a link here in the chat to join our Telegram channel. It is free to join. Here it is. We share analysis, both stocks, indices, gold, currencies, all sorts of stuff. Our team does a really good job putting together free content for traders. You can see the editing team puts together some videos for us, some bonus clips. Frank's sharing chart markups. I also share some of my own. So if you're not in the Telegram, first of all, join because it's free and it's great value. But number two, we'll be dropping some Edge Finder giveaway information for a chance to win a copy totally free. Today is the last day, so throw your name in there if you haven't. Join the Telegram and then look out for the information on that. Bashi says, if I don't win, I'm going to hit Lee on his arm. Well, it's totally random, so there's a good chance you might be hitting his arm because there's a couple thousand people in the giveaway. I hope you win, but it is your odds are not great. To be completely honest, completely fair. But you know what you do win? If you join the Telegram channel, 100% guaranteed, some great free value on Telegram. So we're doing this, right, as a way to grow our audience in another source on Telegram, because there's a lot of people who like reading and who like they're visual learners. They like just getting the gist of our trading ideas. So if that's you, Telegram's a great spot to hang out. Dollar index is a little bit higher here today, up 0.18%. NASDAQ still down 1.3, S&P down 1. Japanese yen, pretty flat today. Silver's down 1.5. Silver's looking pretty interesting here, pulling back into support. Do we have a bullish reading on silver? We do. I may have to look closer at silver. I already have a pretty outsized position on gold, which I like better than silver at this time. But this is a pretty setup. I like this setup quite a bit. This is a 38.2% retracement. Support level. That's a clean setup. I like that a lot. The only trouble with this idea is that if gold is ready to come down, which it's looking like I'm probably about to get trailed out of this trade. So we'll take profits here today if that happens, which is, I mean, it's kind of a relief. I've been in this trade for what? How many days? 18 days. So it's looking like, yeah, we're going to probably take profits here. And yep, that is taking profits as we speak. Yep, we're so close. Come on. Take us out. Awesome. Shout out to everybody else who caught the gold move higher. This was awesome. I'm going to just kind of reset and look for another opportunity. To be completely honest, I really like the setup on gold still. We've shown some signs of potentially topping for now. So we're out of gold. Gold is all out. Very nice. And let me very nice. Shout out to everybody who rode that. Again, that was a really nice move in gold. And this is the beauty of swing trading. I mean, that was 15 days, right? One trade, 15 days. And that's what I love about swing trading is like that was one decision, one idea. We broke that down. And you know, we've had a really good run on this one. That was in terms of let's break this down in terms of a percentage, right? There's on a percentage move, about a 4.75% move on the price of gold, about $136 worth of movement in the price of gold. If you want to put it in pip format, 13,672 pips on that trade. So just depending on how you trade it. Good stuff. Good stuff. To to join the giveaway, look for the post on the Telegram about it and click the link attached to that post. Yes, we will have some information about it. Like I said, giveaway is completely free to join. You just need to join our Telegram channel. We dropped the link just a moment ago. And what I'm going to do here, just while we're on the call, I'm going to drop this. So if you're in the Telegram, I'm about to drop this. Okay, giveaway. Last day to join. All right. If you just joined the Telegram, I just dropped the link to enter your name for a chance to win the Edge Finder. We'll be announcing that later today. What's going on between ICT and Forex, James? It's a good question. I watched his video. He's got some ICTs coming at him, I think. Nick, I want to copy the Edge Finder, but I live in a poor country. Can you work out a way for me to buy it where I can afford it? Yes. We offer extra discounts to places where the US dollar is very, very expensive. If you would like to communicate with someone on my staff about that, we do offer flexible pricing to help people in places where the dollar is very expensive. The best way to do that is to send us a direct message on our website using the link that just got dropped in the chat by my very helpful stream executives here, Chandler and James. Thank you guys. So guys, if you're interested in that, if you have some interest in a more affordable option on the Edge Finder for people who maybe in places where the US dollar is just very expensive, we totally get that. We know we have a pretty global audience. So if you want the Edge Finder at a discount based on where you are, please feel free to send us a direct message in the chat right now. So, yeah, gold down almost 1%. We'll see. I mean, gold is an insane monster. It's really hard to call the top on this. Like gold might just do one of these guys and just keep going. But honestly, I'm happy with the move I got. I got a really nice trade here. If it keeps going, I'll just look for an opportunity to rejoin the trade. But I still like gold quite a bit. Just looking for an opportunity to get now a little bit of a bigger decline, a big pullback would be really awesome. I would actually love to reevaluate gold if it comes back and tests this 29.50 level, right? So 29.50. This is the crazy part, right? This part looked like we were overstretched over here. Now I'm talking about being a good price. That's momentum 101 is buy high, sell higher, right? That's the craziness of it. But yeah, I mean, gold's still getting a +10 on the Edge Finder. Technicals still look good. They've gotten a bit stretched, and I'm going to take profits here, but I'm not opposed to, if you get a big slide in gold down to some key levels, getting back into the trade and continuing to trade this thing higher. It's one of those things though. You have to, when you have a good runner, right? You do have to acknowledge like good things don't last forever in the markets, right? Things turn around. I don't call when that's going to happen, but today we had a clear plan and we stuck to the plan, right? Broke support, take profits. We're done. Take profits and move on. And maybe this thing comes down. That would be my response to this kind of move is like, okay, sellers are actually getting strong here. We may see this thing continue down to like 29.80 or so, right? So we'll see. But I'm just looking for, at this point now, if you give me that slide, I'm probably going to step back in and look to trade it again after a healthy pullback. So that's the idea on gold. The other thing, a little cautious on, is that the dollar index has been really beaten up here, and I think has a little bit of room to bounce. We'll see. We'll see if that can happen. I also like quite a bit the idea of getting long euro and pound. We're seeing some pullbacks trying to happen here. Euro looks a little closer to a possible pullback entry for me. So I'm watching euro, I'm watching pound. S&P 500, like I said, very curious to see how this works out. Reached out to the team. Thanks. Wish me luck. Absolutely, King Chili. Thank you for letting us know that is something that you're looking for. We get that feedback sometimes. People, I understand the dollar index when it was ripping, it's come down a good bit. So we do keep this in mind when considering pricing options for the Edge Finder is what's the dollar doing, because it does actually impact the affordability of our tools for people who are not in the US, right? Nick, today is triple witching. Does it affect gold too, or just stocks and options? Lee, everything pretty much from what I've seen over the years is anything that causes a big stir in one place has the potential, not necessarily the certainty, but the potential to also move other things. If the Bank of Japan does something, right, something big and drastic, it can move everything else. If the, if the options market has some ginormous volume come into it, it can ricochet into other places as people kind of sniff out like, oh, we might have something going on here, right? Does somebody know something? So it totally can, right? Opex day can impact everything. So we will see. We'll see how that all goes. Just going to make sure. Let's see. Yeah, so now with gold closing out for me. Sorry, guys, my computer is lagging for a second. With gold closing out for me, now I'm going to be kind of on the prowl to see if I can get another trade going on this one. But would be looking for, like I said, a bigger pullback before I get jumped right back into a position. NASDAQ down 0.9% here today. Sorry, S&P. NASDAQ's 1% down. Dow Jones also, you can see respecting structure for what it is. I mean, we said this. If the sellers were going to take it today, this was where they were going to do it, right? The idea was a retest of this key broken area of support. It doesn't matter if you're looking at Dow, if you're looking at NAS, right? All of them, interestingly, kind of tagged key resistance yesterday and the day before, and they're seeing some sell pressure to the downside. I want to just repeat what I said earlier. I'm not saying that I think this is going to crash lower, but sellers definitely at least are trying to show up here. As a bull, what I'd really like to see would be for that area to break. But I want to reiterate and say this again. I have no current positions on the S&P 500. When I take one, I probably won't shut up about it. So I don't have a position right now. I have long-term buys that I'm picking up, and I have been picking up. I've paused after this bounce. But if we take out fresh lows from a long-term perspective, with stocks long-term, I like to be just straight up counter trend. Like I like to be, buying into exceptional weakness. With momentum trading, I'm the opposite, right? Momentum trading, I'm looking for, give me those kind of higher lows, higher highs. I'm riding it constructively with a stop loss. But longer term, like holding positions as a position trade, I'm pretty opposite, right? I'm looking for, give me another flush as fear kind of crescendos. That's when I want to be looking to just step in and buy. But again, not all at once and not too aggressively. That's the other thing. There's so many nuances to trading that you learn about. Like one thing from a portfolio approach that I've found to be really important is if you're going to try and quote unquote catch a falling knife in terms of like longer term positioning, like I'm saying, like if you want to stick gold in your account for the next couple years, right? Or you want to buy Apple stock, the concept of dollar cost averaging is beautiful because let's say that you started dollar cost averaging here as opposed to going all in right here. Like if you had just parked a ton of money sitting right there, then like you'd be sitting here feeling like, dang, I could have gotten way better prices. I could have gotten stocks, all stocks that you wanted. You could have gotten another 5% off, right? Now, obviously that's hindsight because it also could have bounced. But my thought process is like, okay, if I'm going to buy something for the long term, I typically like to do it in pieces, like small bits and pieces, add stocks to when I get better prices. And that's what I've been doing. I've been pretty much buying a little bit, just nibbling at stuff, if you will, on the stock side. I've been talking a little bit about some of the stocks that I've been buying. So things like PayPal, Amazon, Salesforce, Intuitive Surgical, American Express, Airbnb, Tesla, Fortinet. I'm watching Meta. If you give me another flush, I'd love to get a chance to buy Meta stock at a bigger discount here. You've got Nvidia, you've got Uber. I'm interested in Palantir, but not quite at these levels. If you gave me Palantir at like $50 a share or something, some really serious pullback, then yeah, we'll see. But I am quite bullish overall. And I think that this is a buying opportunity. And I may be wrong about that. And that's the beauty of trading is, sometimes you're right, sometimes you're wrong. But you don't, the difference is when I'm bullish on something, I'm not going to go all in on it. And when that's the idea, right? I think that one of the things that really is important is even if you have an opinion, one thing that goes really far in trading is hold strong opinions loosely. So when you tattoo that on your forehead tonight, hold strong opinions loosely. It's a really important concept in trading. Like if you think, like I think, here's a strong opinion, I think we might be in the process of bottoming out on the S&P 500 and the NASDAQ. It's a strong opinion because everybody is pretty set on there's going to be a lot of volatility. We could take out fresh lows. A lot of people are like, there's further downside ahead, Nick. What are you doing? You're crazy. My comment section has been wild. But I hold that opinion, but I hold it loosely. I'll tell you straight up, you guys want a preview of an upcoming video? If this thing takes out the lows big time, you can probably see one of my videos with a big headline saying, oh, I'm wrong, or I was wrong, right? Because that's an important trait in trading is like, look, if this thing takes out the lows and my prediction was wrong, I got to hold myself accountable. The first one to say I might have been wrong there. And if you can do that as a trader, it will take you a long way, because if you can't do that as a trader, you're more likely to over leverage and take stupid bets. And then when you are wrong, you are going to be wrong at some point. It is inevitable, right? You just can't call this stuff perfectly. But if you hold strong opinions too strongly or too tightly, right? What can happen to you is you blow your account, right? Because if I was out here and being an idiot, right, I would say, okay, I'm bullish. That's a fair point. You're bullish. You have your reasons, Nick. We've seen you rant about this. What would be stupid of me would be to say, I'm all in bullish right here. And if this thing doesn't rip, right? If I'm right, then I would come on here and be egotistical and arrogant and a jerk about it. And I'd say, ha, I'm right, you idiots, right? But that is just such a losing approach to trading because, look, I might be bullish and I might be right. And that'd be awesome. But I might be bullish and I might be wrong. And if that happens, I don't want to blow up. If you're over arrogant in the market, especially in your actions in the form of too big of a position, the market will humble you. So that's the idea. Is like, I have a strong opinion, but I'm not going all in, and I'm looking for constructive ways to show me signs that we have in fact bottomed. And even when I take those trade ideas, if they occur, right, if we see something like this and I'm getting filled longs, they're going to be small size and strong opinions held loosely. Okay. Gold going to hit stop. I'm already out of gold. I already took profits on it. I'm out of gold. If it pulls back further, I'm going to look to get back into a trade, especially on the daily chart. Got two levels that I'm watching here. If you give me a larger pullback into this area or a larger pullback into this area, that may give me a chance to pick it back up, as long as Edge Finder confirmation is still there. Silver's also getting a strong score. I do like the technical setup quite a bit for silver. You're hitting the 38.2% retracement. I may take a stab at this, to be honest, maybe on small size. But I have a good bit of dry powder here in this market right now. How are bonds doing today? Bonds are flat. Bitcoin, here's a trade. Oh, I'm stopped out of Bitcoin as well. We are all out of Bitcoin. I need to update that. Total flop, complete miss. Where's my Bitcoin trade? Stopped out. Didn't hold support. Okay, I'm out of Bitcoin. We broke, retested, looked good, and just didn't quite work out. 61.8% retracement, did not hold. I was thinking that thinking this whole area could act as an area of support, and it did not, and it broke down, and I'm all out. Small loss, and we move on. Euro's lower here this morning. Here's the 4-hour chart, holding resistance pretty well. Pound US dollar, dollar yen, dollar Swiss, dollar CAD. A lot of choppiness on some of the crosses here. A lot of choppiness here. Swiss yen, I'm still in my short position on this one. This one's been really just gone nowhere. It's gone down, it's gone up, down, up, down, up. It's really just gone sideways. I've been in this trade on the short side since around here. So I am like break even after all this time. So just going to wait and see if we can get a push back down to the lows. Let me check on the Japanese heat map. Let's see. Oh, we got inflation data. Oh, look at this. Yen strength. Has it dissipated from the edge finder? Yes, it has. Interesting. Interesting, guys. I might actually just go ahead. Hold on. Yep. I'm just going to do this right now. Okay. Whoops. What did I just do? Okay. Closing out Swiss yen for a very small loss at market price. Japan CPI was a bit soft. Edgefinder score has weakened. Would rather look for other opportunities as I am now less bullish on the yen. We are making moves today. I'm closing Swiss yen officially. Don't love the I don't love the price action. It's been so choppy. It does cost a slight amount, I believe, to hold this thing short. I haven't checked the latest swap rates. And the edge finder scoring has really kind of just gone back into a neutral territory. Here's Swiss yen, neutral score. So I don't have anything to do with this right now. So I'm just gonna close this one out. So I'm out on that side. No Kenzo today, guys. I know we missed him. So yeah, Swiss yen out of that trade. Euro pound. If this gives me another push lower, I'm probably going to close that out. Has a trend changed for gold on the edge finder? No, it hasn't. So the edge finder, I'll show you how it works. Seasonality +2, retail. So most things still pointing bullish, including the trend on the edge finder score, right? So if I go look at gold, oh, look at this. We're really moving now. That's a big sell day. It's the first sell day we've had in a while. Again, that we could bounce back by the end of the day, but this was the right call, I think, to take profits on this move with a break of this 4 hours support. So if I add the trend filter here on this page, I guess we can, this kind of hurts my soul to do, but goodbye trade. Gotta do it. We're out of gold. No more gold trade. I'll dream about that trade. That was a great trade. That was, just for the record, that gold trade was the trade. That's the trade that I look for. I think actually maybe we should just take a minute to recap why that trade worked. I actually had somebody comment that yesterday. They said, Nick, I've been taking notes on your gold trade for replicating the idea. This was an Edgefinder user that dropped a comment, and I recognized their name. So let's talk about that. How much to make on the gold trade? I've been doing a little bit less. I'll say this before I get into the gold trade. I've done a little bit less of the P&L share just because I'll still do it. I'll still show you my trades. I have no issue doing it. But it's a weird thing. It's the internet. I don't know how much I like sharing, how much I don't. I think it's important to do, right? So like I will show you. Gold trade closed for just about 25 grand, which is an insane number. It's just weird to sometimes do. I don't know how I feel about it. Sometimes I share it and I'm like, that's a weird thing to share on the internet. But at the same time, I also recognize the importance of doing that, right? Not necessarily that, oh, look how much money I made, right? But rather that when you spend your time, look, I actually would highly encourage you. I'm in so many tangents right now. I'm like 17 tangents deep right now. 2 cups of coffee, 17 tangents deep. That's a good Friday morning. When you watch anybody on YouTube, do yourself a favor and make sure that who you're watching has some kind of real proven results in the markets. Because if you don't, let me warn you something. This is one of my biggest pet peeves about trading influencers, right? Is that they can steal your time. You might say, oh, well, they're teaching it for free. Well, first of all, no, they're not. Ad revenue, especially if you get 50,000 views on a video, it pays pretty decent. I mean, I don't really make any money on I do make money on ad revenue, but we have a lot of money that gets invested into these shows. And we've got 2 editors that do an exceptional job, and they're worth every penny, right? They put out great content for the community. We don't make a whole bunch of money net off of ad revenue. We truly, to be completely transparent, we make money off software, right? We sell the Edgefinder. That is how we, as a business, really function. But ad revenue still can be a lot of money. If you're just running a solo ship and you get a huge, video following, you might say you're teaching it for free, but you're not if you're having ads on your video. So that's first and foremost. But if you're watching somebody, they can rob you of your time and you may not even know it. If you spend every day hours and hours and hours watching people's YouTube channels, live streams, videos, you need to know, do yourself a favor. If you respect yourself, ask yourself, do they prove that they actually trade or not? And if they don't, right, don't watch them. It's just really important that you give yourself that respect, because again, you can really waste a lot of time. Anyways, that's why I share, results, my P&L, my wins, my losses, right? The reason I do that is because, again, I respect and I'm very grateful to have this audience that I have on YouTube. And so I do my best to stay real about it, right? I don't win every trade, and then I don't make 15% per month or millions of dollars per year from the markets. And to be fair, I just showed you I made 25K on this gold trade, but there are trades where I lose 5, lose 6, lose 4. So I pay for this one with these ones, right? I have generated profits over the years, but yeah, it's all context, right? You might say, wow, 25K. Well, yes, but I also had to give back a whole bunch of that in trades that didn't work out, right? I took a Bitcoin trade. Can I see if I can pull that one up. This was a really small position, so this is going to look like minuscule in comparison. Let me just see if I can. Hold on. Where's my Bitcoin trade? By the way, if you guys want to know what broker I'm using, yeah, this is going to look minuscule, but that's because this is a tiny position compared to my gold trade. Today, I also got stopped out of my Bitcoin trade. This is going to look pale in comparison. This is a really small trade. It's my first attempt. Like lost $400 on Bitcoin. I know it's like nothing. So I mean, it's a lot of money. Don't get me wrong. It's just nothing in comparison to the gold trade. But that was my first attempt on Bitcoin. And it didn't work out. So we just scrapped that idea. I still think it was a good trade to take based on my rule set. Just didn't work out. S&P still down about 1% today. How's Tesla doing? Come on, Tesla. Wow, Tesla's up today? Tesla, don't do this to me. Don't get my hopes up. I also have a position in IGV. This is a software sector ETF. This is actually a good size position for me, and a swing trade, a true swing trade. Let me pull this up. IGV. You see, I'm still down on the day because I've got a lot of stock shares that I bought recently. And the gold trade gave back. This is daily P&L. So on IGV, I bought this thing on a weekly chart. Love this setup. And to be honest, the longer that I trade, you know, the higher the time frame I go. That's the truth. Is, you know, years ago I was 1 hour and 4 hour. Then I have kind of recently in recent years gone 4 hour and daily. In the last like 1 year, I've gone heavily on the daily. And I actually took this trade on the weekly chart. More of a swing trade, more of a long-term position for me. IGV at a long-term level of support going back to 2024's February, so a year ago. Key support level here. Bought it down in this area. Ended up being a pretty good entry. We're bouncing so far. We'll see if this can continue to hold. But this is one that I like. Long-term uptrend. Really solid. Software in general is an area of the market that I like quite a bit. So we'll see. That might end up being a nice winner if the market does bounce a little bit more. Did Tesla find support? Man, I hope so, man. I mean, this is an ugly chart. You want to talk about an ugly chart? Look at Tesla. So I had 100 shares of Tesla, and they doubled, right? And then those 100 shares came all the way back and are now just about break even. That's the crazy thing about stocks. And you might say, well, Nick, why didn't you close? Why didn't you get? Well, I know it's hindsight. I wish I closed too, but I also have vivid memory of some of my best trades in my career were on Tesla longs when I made a bet, an educated guess, just like any trade, that the Fed's money printing in 2020 would just send money into every single kind of aspect of the economy to try and save the day, that they would have a freak out to the COVID pandemic and print a ton of money. That was one of my best career calls. Let me give you one that wasn't my best career call just to balance it out. In 2022, I thought the market wasn't going to go down that much and that inflation would be temporary. Got wrecked in 2022. So did Tesla. So, you know, my memory of, oh, why didn't you close it when it was up 100%? Well, over here, it went up 1,200%. So, but Tesla's one of my favorite long-term companies. It's controversial. It's expensive as anything, but I like the company a lot. Back to S&P 500, down 1% today. Again, looking for one of two scenarios. I keep coming back to this. Breakout, retest. I'm going to look for longs, momentum, short-term trades to the upside. If we take out the lows, I'm going to look to accumulate more shares of stocks that I like. Buy the dip, Nick? Yes, sir, Sean. I'm with you on that. I've got a good number of things on the watch list, and I am wondering what's going on with Tesla today. What I'm going to do today is I'm going to buy some Tesla shares, and then I'm going to go to a Tesla protest. What do you guys think? How psychotic is that? I'm just kidding. That's actually been an interesting story to watch. There's been people going to, I guess, Tesla dealerships and throwing, well, they were going to throw eggs, but egg prices got too expensive. So now they're just throwing tomatoes because I think tomatoes are made in the US, so the tariffs won't get them. Chinese stocks down 2% again today. Look at this. 5.5%. I laughed so hard. What do you do on Fridays? What am I doing today? So there's a new severance. Oh, what am I doing today? I am going with my wife to watch the new Snow White movie. We are all sorts of controversial topics today. I'm a walking red flag. 2 cups of coffee, walking red flag, tangent 28. I watch another guy, and when his streams go super off tangent, he calls them cursed streams. I think we're having a cursed stream right now. It's Friday, and it's Triple Witching Day. We're all going to die. Just kidding. But no, I do think, like I said, I think that you have Triple Witching Day. What does that mean? Well, a lot of options are expiring today. Like a record number of options are closing today. So, James, you're killing me. Anybody watch Severance in the audience? Anybody seen the show Severance? Now, that's a tangent that would send me into a spiral. If you haven't, it's on Apple TV. Watch the preview. It's free to watch. You can watch the first episode for free. Look at me. Apple. Can I get some shares for my? Could I get some free shares for my promotion of? Oh my gosh, yeah, Bashi, it's good, man. I'm on. My wife and I just finished season 2, but we're gonna go see the new Snow White movie tonight, and then I'm gonna apply to be an extra on the next Snow White movie. Do you stream in your house or do you have an office? I do both. On Wednesdays, I'm at home, but right now we're in the office. He's buying the dip, of course. If we keep going lower, I might need to. Look at this. Russell's down 1.5. This has been, I'm telling you, man, the Russell is going to either be, I said this the other day, and I feel very strongly about this. Russell's either going to be a top tier call for somebody if they're right, or a disaster if they're wrong. And I don't see an in-between. Like the Russell, why do I say that? Well, if you get a scenario in which, let's say it's not the end of the world, like let's say like the tariffs, the inflation fears, let's say things even out, smoothen out, and the economy's okay, and inflation doesn't go crazy, I think the Russell is going to be a monster, right? That trade would run hot. But if you think that the tariffs are going to cause some problems and that, all the regulatory hype that the Trump administration got in the stock market is not coming for a while, Russell, I think, would be a disaster. It's been a disaster, man. This has been a poor place to invest for a number of years. I mean, if you've been invested in the Russell since 2020, it's flat. So that's 5 years later, and your money has gone nowhere. So, you could have been in the DAX, you could have been in the NASDAQ. Obviously, that's hindsight speaking. And one thing I would also encourage you to do is don't look at the past to try and measure exactly how, a lot of times people are like fully convinced that the stock market in the US is going to be the number one forever. And I think it is going to be the number one for a while, but FX Shadow, you made me sound like an absolute insane man. My to-do list today is to go buy Tesla shares, then go protest at a Tesla dealership, then make 20K on gold, and then Got to be fair. Give some back on Bitcoin. Give some back on my stock positions. And then I'm going to go watch Snow White. Be a little sad about the Swiss yen trade. Yep. Drink 2 coffees and then have 27 tangents. That's a great day. I'm in Italy driving a truck right now. What's the weather like in Italy? That's awesome. And rewatch Severance. Yeah. DAX off 1% today. Gold is really melting now. Look at this. Looks like we got out just in time. Right around here. What was my stop? 3,015, I believe, was the stop. $3,015. Yep. So it's dropped another $14 per ounce. That's a good move today. That's the first real sell day we've had on gold in a long time. I know there's some people who are feeling a lot of relief right now. If you've been stuck in shorts. But like I said, I'm if this thing keeps going, I will have to step in and look to buy again. We'll see. If I take that trade, if I take a new trade on gold, I'm going to watch it for the rest of the day before I go see the movie. If you are not in the VIP group and would like to be, here's your chance. Here's your plug for the day. Come join us in VIP. You can see every trade that I take in full context, full details. And like I showed you earlier, every trade I take is my own hard-earned money. The reason I say that is because there's a lot of signal service out there that do not do any sort of live trading or show you a real account. They just, charge you money for a service, and they don't offer you any kind of proof that what they do works for them long-term. So if you like the way I trade, if you'd like to trade the same way I trade, if you'd like to trade alongside with what I'm doing and see what I'm doing in the markets, and more importantly, why I'm taking the trades that I'm taking, join me in the group. It is a great place to be, especially this Friday. You can spend some time going through the educational resources, the coaching webinars that we do within the group. There's a ton of value. So if you're not already in there, we'll drop a link here in the chat to where you can speak directly to our support team if you have any questions, or you can head over to a1trading.com/VIP. Maybe Chandler or James, if you guys could drop just the link to the VIP page as well for people to explore what a membership entails. That would also be an awesome option for people to do. Again, head over to a1trading.com. You can explore all of the different things that we offer. Now Nick is going to short gold. No reason to short gold. For me, you might have a reason, and there might be a valid reason that you have. But for me, fundamentals, swing trade, momentum, trend, kind of all point bullish, just waiting for another entry opportunity. But yeah, we do see indices making some violent moves here today. Ten-year treasuries still getting bullish reading on the edge finder. Let me look at this TLT. Interesting. Some bond activity here. Euro's a little bit lower. Like I said, I'm looking for some pullbacks on this one. Euro, pound. Having to be patient on these though, because I've been waiting and waiting and waiting, but I just need, I actually would like the dollar to just give me a little bit of a bounce. Now that, especially now that I'm out of gold, I wouldn't mind it at all. I took the profits on gold, so if dollar could give me a nice bounce, that would actually be great, because that would actually give me a chance to get some pullback entries. And then I think the risk to reward looks pretty good on euro, pound, some dollar bearish setups. And this is, that's trading 101. Is it's sometimes frustrating when you've got an idea, you want to be in a trade, but you don't want to chase it, right? So I'm waiting for those dips on those places. And I might have to wait till next week. So anyways, guys, in just a moment, we're going to hand the show over to Chris Pulver. You guys know him and love him. He shares in-depth market analysis on the show pretty much every day of the week. So we're going to have him join in just a second. He's not at his desk, but he will be in a second, and then we can pass the show over to him. In the meantime, we are about to, this is just your final call on the Edge Finder giveaway that we are doing this week in the free Telegram channel. If you didn't join already, join. We'll drop the link in the chat for a chance to win. Enter your name into the hat. We're going to be selecting a winner here shortly. So join the Telegram, click this link, just throw your name in. We're going to announce a winner today. Okay, up next, we got Chris Pulver taking over the show. Stay tuned, guys. We'll be right back.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, how we doing? Happy Friday. Welcome back. Give me one moment here. Okay, let me double check. Posted a new trade yesterday on Amazon. Gold's actually looking pretty good. The trade that I took on gold futures is up about 70% of my max profit already. Gold finally turned, which is not a surprise. I was expecting this to fall. We had about that 15% stretch away move. I think this is good for an opportunity to hopefully get a position on gold. Maybe, I mean, is this it, like this little tiny pullback, or is it going to be the start of something to come, like a, you know, is there a topping pattern in gold that comes back to a deeper level? I don't know. But as long as we stay less than 3250, then I'm looking good for my position here. And then any add-on trades, I'll be looking to add a little bit, you know, more GC exposure or more GLD exposure on a dip. Silver also having a bit of a pullback. Let's just go top down today. Interesting spots at the market. You know, we gapped lower. I look at this a couple different ways. Either we go out slightly bigger time frame here. So I'm looking at, I mean, we have a ton, we have like $4.5 trillion in option expirations today. And you'd think by watching 25, 30 minutes of price doing next to nothing today, it's like, would anybody even notice that? And the only real shining star of today is Tesla. In the entire heat map, we've got about 70% of stocks down this morning. And yeah, 72.4% of stocks declining today. And Tesla is fading. So we're at like 2 or 3% positive on Tesla. Now it's 1.24. We'll see. This is an interesting kind of look for the day. The markets really haven't done much outside of gap lower. Futures wise, you know, futures has clawed back a little bit. So, I mean, NASDAQ futures almost has taken away the decline from 8 o'clock this morning. If we end up taking out a recent high here, that would be a bit of a surprise, but I wouldn't be offended by that either. So I'll add a couple alerts, see if we get back to these recent highs. But talking about the high to low swing, we had a really strong level here around 5,600 on SPX. And I looked at today as like a coin flip day. You know, this could be seen as a low to high pullback, and the market is just using this as a flat pattern to find the right-hand side of the trend line into either, you know, next week's trading. If the market still maintains a little bit of a bid off these lows and we come back to that like 38 to 50% zone that I talked about, where the bulls and bears can really fight it out right around that 5,800 handle. You know, that would be getting us through the end of the week, which is the 20th expiration, gets us through the quarter on the 31st, and then the market kind of gears up and gets ready for a potential, you know, volatility event coming into early April with tariff talk. Okay. So, but when we open up this morning, is like, well, we're sitting right at this trend line. If we end up breaking the floor from Tuesday, you know, the market may claw back down and try to find this gap, maybe even try to revisit the lows. So far, price isn't doing anything. I mean, it's just been relatively calm this morning. which is a bit of a surprise, but I'm okay with it. I just see these are my levels. So pretty sticky spot right around this 5,600 handle. If 5,600 can hold, then I, could see this market trying to come back and fill in some of this gap from yesterday. If 5,600 doesn't hold, then look left. I'm going to slightly higher time frame. If we don't hold 5,600, which would be the floor from Tuesday, so we've got this gap to close out from yesterday's close. We have this gap from Thursday, Friday last week. Okay. So what is the market going to do today? I don't know. I'd like to see the floor hold. I'd like to see it get back into this area here. I just don't see a lot of levels between 5,650 and 5,600. I mean, it's really easy for the market to just scream lower. It's really easy for the market to do nothing. And so I'm just kind of sitting on the sidelines and just going back to see, okay, what I do this week. Made a lot of trades, a lot of profits, more income trades that'll close out for full profit today. They don't have to touch and manage. I added some calls, I added some diagonals, I extended some of my trades out, but a lot of income trades for this week. So let me have a quick look here. This account I've got to watch pretty closely for. There's a couple positions here that I'm watching for a March 21st expiration. This one here. So this trade, if we hold above 560 today on the SPY, which we're trading at 560, like right on the nose today, I could just take a small winner. Let's see, 560 SPY. We're trading at 560 and change. It might just be worth it to take a small loss on this trade. Let me see what this is trading for right now. I'm going to take go 85-cent debit. All right, I'm just taking a small loss by about 35 cents in this trade to avoid. I've got a $900 risk on this trade, so I'm fine taking a $50 loss as opposed to a $900 loser. And it probably wouldn't be a full loss, but there's risk below the 560 handle for me. This one is just better managed to just take the small loss and not worry about it. I still have trades out to April, still have trades out to June. Any of the trades today, this one should be good. So this trade's up $60 right now. And this trade is down slightly. What? This one should be fine. If we stay above 465 today on the Qs, this one's going to be finishing out for $1.46. Oh, okay, never mind. That's not today's expiration. That's next week. Gotcha. Okay. So this trade's looking good. And this trade is okay if we show some resiliency going out to the 31st. So a couple more trades to monitor. Get rid of the SPY one. That's fine. SPY is good. SPX. March 31st is the nearest expiration. Couple of daily profit plays, watching those closely into April. XSP, some key levels. XSP for next week, Friday. If price is above on XSP, which is the mini SPX, if we're above 550 and above 550, then I'll be showing some profit traps on those, as well as hopefully the credit plus a profit trap. But key level. Okay. So a couple things to monitor for the day. I've got some chart alarms set on SPY and SPX. Let's continue to work through positions. Futures wise, we had a sell off at 8 a.m. and the market's just kind of clinging to these levels right now. That same floor from Tuesday is still kind of holding. Qs, again, gap lower, right back to the floor for Tuesday. More noise, more chop. Hopefully really, I hope the support will hold. It's, if the support doesn't hold, there's a bigger flush to retest the lows perhaps. But in this environment going into next week, end of quarter, we got through the Fed. Next week, Friday's PCE. I would say that the most pressing thing right now would be it's kind of quiet on the Donald Trump front, which is almost impossible to know. But if price can hold and be relatively firm today, then that support level looks pretty good for maybe a gap fill and a slight nudge higher next week. Dow, down. We just had mostly big gaps to the downside today. SPX, SPY's down 1%. Why? Mostly because of a gap. Price didn't really do anything, but we just gap lower. So gap lower on SPY. Equal weight down the same amount, another gap lower. Qs down 0.72, again, mostly gap. Dow down, mostly gap, like price hasn't done anything. Russell gap lower, down 1.2%. VIX a little bit stickier here around that 20 handle. Could VIX go a little bit lower to settle into maybe the teens? Possibly. VIX 1 day fading a little bit. Dollar index. We talked about this. If anybody's looking to get long in the near term on the dollar, change the color here. If anybody's looking long on the dollar, it's just a near-term correction to me. We pull back into this area on the dollar and then looking for resuming short positions. But I do think in the let's say the next 1 or 2 weeks, if the dollar catches a bid, we might see the dollar index head up to 104.50, maybe even 105.50 zone. So if anybody's looking for scalps out there, oil. Still hanging out at these lows. I don't have anything on oil. I'm still holding on to UNG for natural gas, gold. 2 trades. I'm running with credit spreads from down here, credit spreads from here, and then I put on a call condor position where I'm basically, if we get a push higher, there's a $500 profit trap here, as well as a $1.20 credit. So this trade over the next probably now 40 days. Maybe less. It might be only 38 days left. Let me double check. 34 days left in the trade. So let me check this is out to April 24th. So let's go April 24 on GC. So right here. My 32.50 is now a 9 delta. There's a 91% chance this trade finishes out of the money, which is great. That's the initial trade. It's a $1.20 credit. If it gets into a profit trap here, currently the April 24th price is 339. So I've got a profit trap between the 30.80 and 30.85. That would be fresh highs on gold. If we have a retracement or a pullback on gold, then this trade just gets more profitable faster. So again, this 21 period is like the minimum. Okay, this 21 moving average in this previous high would be like the minimum that I see a pullback in gold. So if I'm looking at new positions on gold, I'd at least want to see a pullback to the. I see your comments, Bashy. What are you talking about? Gold? We're talking about gold? I'm just doing top-down analysis. But I'm looking for a minimum pullback towards the 21 moving average. I'd like to see it pull back a little bit deeper. The same reason I got short in the markets this year or hedged the markets is because of this move down to the 200 moving average. So, a deeper pullback, and I don't know what the turn would be on gold outside of maybe some heavy profit taking. We breached the 3,000 handle. It may have been something that everyone starts to see it, and then you see some retail traders start to jump in and chase this thing along. It could be a crowded trade to the upside. So I think a pullback is needed. We had that 15% stretch. We've got a 360 plus bar count. So I just remain pretty patient and pretty medium to long-term bullish. Okay. But I want to establish new positions. I just want to see where it's not at highs. I want to pull back. Silver, I'm still going to ride silver out a little bit to, if we come back to dynamic support, could be back into these moving averages. I might look at another silver futures trade, below this level. I think silver is also very well supported all the way back down here. So higher lows would be great. If we have higher highs, higher lows, higher highs, somewhere in here would be doable. But I want to make sure my stop area, or my risk would be somewhere, in this area or lower. That could be a silver futures trade. Bitcoin still hanging out around 84, nothing too exciting. I did take some profit on IBIT with some puts this week. Let me make sure I don't have any of those remaining. So let me double check here on all accounts. BITO, that is a collar trade, and then IBIT is the one I'm watching for. I think I closed out most of these trades. Yep, these are all out to April now, April and May. Okay, so I closed out my March expirations. I had the 51, 50, 49, 48 all puts, collected like $6. I closed it out for like a $4 debit, or just I made a couple bucks on the trade, but I didn't want to take the assignment. So I'm keeping the buying power and taking the small profit and then moving on. Okay, MicroStrategy still around 300 bucks. Coinbase, watching this one for next week as well. This is an expiration on Coinbase up to a 195 strike. So coin is here. This is an expiration for next Friday. If we're above 195, there's no assignment. If I'm below 195, I take assignment for 100 shares, and I'm going to try to do a quick repair. Possibly same thing with Tesla, either a quick repair or a collar trade. Just depends on which kind of premium set looks a little bit better. I think going into April, if the market's going to flush lower, I think the collar trade's the safer play. If I wanted to really lower the cost basis aggressively, then a covered call is going to get me a lot more premium. So I'll debate that over the weekend and kind of decide what I want to do on Monday. Copper pulling back a little bit. This is another one. We've got a pretty strong uptrend. And unless copper is going to absolutely put the brakes on at these all-time highs, I think a rally, pullback. If copper turns here for another higher low, we start going to all-time highs once again. Copper could be another one that looks pretty good. This trade that I put on for copper futures is up like 90+% of my max profit. I'm just going to let this one expire. So copper it's up 82% of max profit. So I'm just going to let it expire. These are April 24th. It's way, way, way out of the money. I think this one is probably safe for the income that I have. Japanese yen, nothing really happening there. Nikkei, not really doing much. Japanese yen, not really doing much. EWJ pulled back a little bit. DXJ pulled back a little bit. DAX, still choppy. Maybe a pullback into the 50 or 100 moving average. It's not the number of bars, but the percentage away. So a long percentage away from the 200. Maybe a bull flag, for the aggressive DAX. But if we go, up and stretch away and we just have a little bit more of a pullback here, wait for a trend line break, look for some dynamic support. I think Europe and Asia still both look pretty attractive for the year. FTSE, same thing, looking for those deeper pullbacks between like the 100 and between the 100 and 200 moving averages. Look to see if the FTSE will, offer some support, turn green, stop loss below. If we come back to new highs. Again, it's a non-US play. Argentina, I'll wait for a deeper pullback. China pulling back for the last couple of days. Brazil, I'd love to see Brazil. We talk about this at some point. If it's up above the 200 moving average, to me that would be a pretty good indication of a buy zone. So I'm already long. I mean, I got long on Brazil back here when it was first in this zone. So I've just kind of waded through it, and now EWZ is in some profit. So if we get above this 200 moving average, this would be the first time in a while that we show a potential buy zone. So above the 200 is a good looking sign. There's plenty of room to the upside here. I'm looking at a target of around 40 bucks. ILF is Latin America. It's 40 plays. Mag 7, another one that's just looking a lot like the index. We had the flush. We're back down below the 200 moving average. This is where the near term, like the bulls in the near term, we can have a cover. We can have a little squeeze, right? The bulls can pull back into this area, but this is why I would say, because we broke the 200 and didn't immediately bounce back above it, this is where more of the the talking heads and macro out there is talking. Well, this is any type of This is a bull rally and a bear market. Now that we're strongly and firmly below the 200 moving average. I mean, maybe. If Mag 7 slides lower, index is going lower. If the index slides lower, is Mag 7 going with it? Probably. This is more of the de-risking, deleveraging. I don't think that the Fed put nor the Trump put is in at that 10 to 11% correction on the S&P. I think it's lower. I just don't know where. It's like the scary thing is, could we go all the way down to like a 20% correction in the S&P? That would be you'd have bear market conversations. But I do think it's still an incredible opportunity to just be ready to have some cash to deploy. It might be painful, it might be messy, but if you go back historically, and anytime you've been offered up a 20% discount, it's not very often. I mean, to my knowledge, you got a 20+% discount in 2022. You had a 20+% discount during COVID in 2020. You had a pullback in 2018, early 2019. That was over 20%. The last time would have been 2016, and then probably 2008 and 2000. Like, you're talking major corrections and crises and bear markets for a 20+% correction. Now, as we talked about this week, put in perspective, 20+% happens like every 4 years. 10% happens like every 1.5 years, every 2 years. So, I mean, we saw a correction in August for 10+%. We saw a correction this year for 10+%. And so that's what the market's kind of gripping with, or grasping right now is it a correction, or is it about to get worse? And we don't know. So anyway, Mags is hanging out just below the 200 moving average. Is there a chance for Mags to play a little catch up, try to come back and retest this 200 moving average? Is that a spot to sell the Mags again, or is it going to close back above and actually give the market a chance to recover a little bit? To be determined. Okay. So we gapped lower, showing some green on Apple. We gapped lower, showing some green on Amazon. Broadcom still hanging out at the 200 moving average. Google, just slowly sliding, but I still like the income trades that I have on Google. My next ones are out here to May and December, which I wouldn't mind owning. If I took on some shares of Google, it would be, this has to be, okay. I did debit spreads. Okay. This is fine. So I did that can't be right. Is that right? Hang on. Let me check this real quick. Google. These are all puts. December 135 by 130. Was this old? That trade's done. Yeah, this trade was back in here. Okay, so this one's closed. I have the May ratio spread and then a December ratio spread, and then I've got a naked put. That's it. So I'll add in the December 19th 135 by 130. December 19th. So buy the 135, put, sell the 130 put, and that ratio spread is $2.80. So just a little income trade there. Meta. I'm not ready to take a nibble on Meta. Yeah, I saw that Nike had earnings. I took profit on my puts. I had a $65 and a $60 put, which I'm kind of glad that I did. They expired on, I think their expirations were today. Nike actually had positive earnings, but the stock gapped lower. Now, that being said, this trade I closed out for profit. I had a $1.72 credit, closed it out for a profit, mostly because I wasn't sure what earnings was going to do. But now that we're down to 67, we actually did see like positive earnings. I might see if I just do another like out of the money put. Let me see if I can collect some premium here. So I don't mind Nike. Fair market value. I think it's it might be around current price. I mean, it gapped lower, so we're finding fair market at $64. So I guess what I want to look at here is if the IV is high enough, could I sell, a $55 to $50 put and, collect some decent premium? Let's take a look. Trade on Nike. If I went out to June, 90 days out, let my option chain fill in here. I mean, if I really didn't want to worry about it, then I could just sell premium out to December and say, I think Nike's like selling a 60 or 55. It's like, that's not collecting a bunch of income there. Collect $1.50, which is, it's okay. It's just outside the expected move. We're post earnings. So unless this thing really starts to tank, but I'd almost rather go out farther. So I collect $1.50 out to June. So keep an eye on that one. If I went out to December, similar premium, $5 strikes. I might be willing to do like 60, 55, and 50. Come on, option chain. Good Lord. If I did the 60, 55, and 50, I mean, that's a decent amount of credit for a stock that I'd say I'd be willing to own Nike. Ownership price, if I got to sign on any of this, 60 and 55 and 50 should be a $55 assignment price. So if I own it at 55, collect 786 divided by 3. I mean, I'd own shares of Nike at $52.38. So 52.30 would be, well below COVID lows. If Nike is, I mean, if we're falling, what would that discount be from all-time highs? Nike down to about $52. It'd be a 71% discount. And I'm not saying Nike can't go lower. I guess the big question mark is if we get a little bit more instead of frenemies, we become more enemies with China. Like, does Nike get hurt even worse? If trade war and tariffs, do they escalate? I mean, Nike could certainly, like, that is the risk. I'd say that is the risk, even though it's a household name. I don't know. It's not a bad trade, but I'm gonna take the trade. I mean, that's a good chunk of income. I know it's out to December, but if I pulled in, $750 to $800 on income, it's not bad. Probability is around 75%. Out of the monies, I mean, our assignment risk is maybe swap this for a slightly lower strike. So this one increases my probability now to about 81% chance of profit. So 55, 50, and 47, that would be a slightly different ownership price. So 55 and 50 and 47.50. 152 divided by 3, break even at 50.83. 50.83. So now I'd own shares at $49.12. Okay, so that's not bad. I'm going to take this trade. So if I can get over $5 for it, I'd be pretty happy. The bid price is $4.92. See if I can get over 5. Let's try to get some premium. Let's start at 5.10. So put this one on here. 511 just got filled. 9732. And this account here. Take the trade. There. Okay, 510 filled. Okay, so 1, 2, 3, 4 accounts. 1, 2, 3, 4. Okay, got it filled. All right, so that's getting added in here to Nike. And I'm willing to own. So Nike, a 12/19 expiration. And I'm doing a sell the 55 put. Sell the 50 put and sell the 47.50 put. Total collected was 510. Willing to own shares, if assigned, that would be a break even at 49.12. If assigned on all 300 shares, break even is 49.12. Okay, so I'll add that into Pulver alerts. So that will be, this trade's closed for profit. And I'm going to add in this trade here. So a December 19 expiration. Okay, so taking my credit out there, I'll put a line in the sand at 55. So go horizontal ray at 55. So that's where the risk is. That trade's closed for profit. And if we stay above it, cool. And some traders might be more excited, like to see that earnings were positive and we gap, lower, that maybe they just want to buy and see if they can fill the gap. That's fine. I'm just going to sell premium and not necessarily take on the risk. Not necessarily own the shares. If there is another slide lower and then we fill this gap, I might take a stab at a bull call spread, but I think right now just selling the premium and not worrying about it too badly would be fine by me. Okay. What else? Nvidia, sideways, Tesla. One of the few stocks that's green today. I will share a little bit of a story on Tesla next week, because I will be looking to take some assignment today at the close at 255. My break even is going to be around 247. And I'm pretty sure that the safer trade is to take the assignment, cover, and buy a put. So I have a collar trade. If it goes lower, I can lower the cost base. If it goes up, it gets called away. But let me look at that right now. I don't have the assignment yet. This is going to be something that settles over the weekend, but I will be watching this pretty closely. So let me look at Tesla really quickly and just kind of get prepared for what a collar trade would offer. Earnings on Tesla's out to the 22nd. So what I probably look to do is go out to the 17th expiration and look at a collar trade. So if I own the shares around 247, I could look at a 250 to 255 and see if there's a little bit of recovery, make a few bucks on the call side. So if I have the 250 call or 255 call, as long as I can finance that, I don't have to go out super far. So maybe a let's see, 1060 credit. That's up 20 bucks to down 20 bucks. That gets financed for $1. Maybe go a little bit further out of the money, a 25 put. That's not awful. I could get the stock called away for be a 247 break even, minus $4, 243 break even, get it called away for 255. I still make $1,200 on the shares, and I still have protection to the downside. So, this would be, the goal is to get me. This collar trade would be to protect me through tariff season, whatever the heck that looks like, through early April. It actually might be better if I go out a little bit farther. So instead of going, I'll go through earnings. I kind of want the premium, like pre-earnings, in case it just goes up on its own. Like if this tariff conversation isn't as bad as what the market's already kind of priced in a little bit, then we could see a bounce up in Tesla, bounce up in Mag 7, bounce up in the indexes. I don't know. We'll find out. But earnings could be the next big catalyst. So if I can, make the money pre-earnings, that's fine. And then if I still have any shares, through earnings, then I'll extend it out by another probably 30 to 60 days. So, all right, that'll be a discussion next week. Berkshire Hathaway, full profit coming on this one this week. TLT, Diagonal spread. This one's out to April. I don't really have to do much on this outside of wait for the sell side to expire. So my 62 by 95, that is April 30th. So I still got a little time on that one. Fed funds rate. What do we have here? So we got the 2-year dropping. We got the 10-year sticky. Is that making the? Is this deepening the inversion again? Nope. This is going the other way. So this is the 10 and the 2 going higher. The 10 and the 3-month continues to stay inverted slightly. China has been pulling back. I'm just going to be careful on China. This is my current position with JD. I still have shares of Alibaba and some ratio spreads and bull put spreads. Baidu, I still have some shares with a collar trade. SCHG, SCHD, SCHY, just some inexpensive kind of broader market plays. Stocks above the 50-day. Watching this as a timing indicator. NASDAQ stocks above the 50-day. Watching this as a timing indicator. I wonder if consumer discretionary and tech would be offering up the first bounce more so than the S&P. Maybe. Walmart, 86, bouncing off these levels. There is a trade. What is my current trade on Walmart? Walmart, I went up to August, 100 by 65. Yeah, I'm just going to, it's, hopefully not a super high beta stock. It usually is not. But I've got to put protected in case we go lower. If we break below the 200 moving average, I mean, this should be a correction that offers up maybe a decent rally. I just don't know if this is the high, low, lower high to lower low. And all of a sudden we're talking Walmart, fair market value, which is in like the 80s right now. I mean, I do think that there's room to run. Checks a lot of boxes, not a ton of risk as far as the overall stock. One of the biggest retailers in the world. Definitely trading a little bit higher price earnings multiple, but fair value around $97, and I've got it covered at 100. So if I get it called away, fine. Current price is 85. I mean, this shows that there's some resiliency in Walmart around $86. Hopefully back up towards like 95 to 100 is fair. If it gets called away, I mean, the recent highs were 105. So anyway, that's Walmart. Nike just put the trade on. Home Depot, quite a bit below the 200 moving average. I would be kind of cautious on this one. I think we need an improvement in the housing market for Home Depot to get a bid. We need to see. I mean, these are big projects, right? If you're spending at Home Depot or spending at Lowe's, you're typically taking on housing projects. You're talking your average checkout is way more expensive than a typical transaction at Walmart or even Amazon. So I would like to see it. If they fall lower, there's a lot of support back here. This is Home Depot around like the 285 zone. Back here on Lowe's around the 185 zone. So if they become attractive, then sure, I'll take some stabs. AXP, I do have a ratio spread in this one. I'm going to keep a close eye on AXP. So right now, I do have some ratio spreads. I did an April-May ratio spread. So overall, upside down slightly on ratio spread there and ratio spread there. So monitoring 260 is my line in the sand. This might work out to be a bonus trap, but I just have to wait a little bit more time. So we'll see what happens. I don't mind this trade. If there's resiliency here, back above the 200 moving average or just hanging out around this 200 moving average, then this one looks okay. Johnson & Johnson, my healthcare play. PG just off PGR off the highs. CB, this is good for profit into May. Palantir still hasn't pulled back enough. On Palantir, I wouldn't be shocked to see this high, low, lower high, lower low, find the 200 moving average. If the markets run away from growth and run away from momentum, then this stock is likely going to face some more resistance ahead. So it still looks good for some of my ratio spreads that I put on here for income. In the near term, I'm not buying Palantir right now, even though it was a pretty hefty discount. Did anybody take some Palantir there down about 40%, trying to play those lows a little bit? I did not. I'm just hanging out here with some expirations to make some income. Carvana, pretty decent pullback, down 45%. I'm not going to touch this stock. I was in the Carvana play here when it was head and shoulders. I was happy with that trade, and I did not chase this thing up to the ridiculous triple-digit gains that it had. Salesforce, O'Reilly, Redfin, Zillow. Yeah, that's about it. All right, let's get currencies going. What happened to gold? I don't know. Profit taking. Only the technicals that I've talked about for the last couple of weeks, which is be cautious on the upside because we're probably going to get a pullback. So what does the headline say for gold? Pauses record run as dollar rises. Gold dips on higher dollar. I mean, that's about the only thing I see the correlation is the dollar got a little bit stronger, catches a bid, and it pulls gold down. Gold is still a great instrument. Gold is still a bull market. I think this is one of the healthiest bull markets we have in the to choose from right now, and it's not necessarily for the greatest reasons. I mean, gold bull market is probably just because of the heightened global uncertainty. Let me check one quick trade here for today. SPY. Son of a biscuit. All right. Can we get a gap fill today? Come on, bulls. Show us something. All right. Just going to keep a close eye on that. When the volatility was high, I did sell a cash secured put on SPY, cash secured put on Qs. That's up 73.5%. That's not bad. On the Qs, sold some puts. Put. Sitting up around what is that? 550, $700 on these puts. So these are not that far away for, I would say, full profit. I'll just do a group here for naked put combo. And collected $9.88, and it's up $700. I mean, it's not a bad spot to be protecting. I can let it go all the way to profit, but I mean, they're quite a ways. They're way out of the money for this next, 30 to 90 days. Probability profit on each one of these is 97 to 98%, 99%. So that's just taking advantage of the, high IV rank that we saw with the kind of peak to trough when we got the IV ranks up into the 50s and 60s. I sold some premium. Those are way out of the money. I sold like a 10 delta put, 15 delta put. So just trying to make some bucks. All right, let's keep going. Let's get to currencies. Good entry for gold. I'm just going to wait. I mean, if you look, gold would be this. If you're taking little tiny stabs at it, a pullback here, small entry, a pullback here, small entry, a pullback here, small entry. I mean, if you're willing to kind of dollar cost average into gold, I think having a level somewhere around, I mean, that's a 3% correction. That's a 7% correction. That's about 11% correction. I mean, I think that's great. Because I mean, gold running to all-time highs again and again and again and again with what seems to be a pretty healthy bull market. I like the trade, and my stop area, if I was going to take the stop, would be anything below the 200 moving average. I wouldn't want to see too much damage done to it, but I don't know how much longer we go before we hit it. So anyway, if I'm trading small enough, gold is fine. Like just dollar cost average into but give me a pullback. That's what I'm saying. Like a pullback to a minimum, this previous resistance or this 21 moving average at the minimum. The last time we hit the 21 and the 50 combo, it was a pretty good combination of support. This hit the 21. It's like it's just been an aggressive bull trend. So I'd like to see at least a pullback towards the 2150 moving average and maybe call that position 1. We pull back towards like the 100 to 200 moving average, position 2. I'll wait for that. If it keeps going and going and going and going, okay, I'm not going to get the dip that I want. I'll wait. All right, let's get to currencies. Okay, currencies, Aussie CAD. I'm still bullish on Aussie CAD just because it's a slight positive swap. And to me, this is an easy range currency. You're buying the lows, you're buying the lows, you're buying the lows, and there is equal highs and equal highs to trade back to. So if I'm just leveling myself into Aussie CAD, I think there's equilibrium profits and there's range profits at resistance. So it's a slight positive swap. It's a reliable, efficient range currency, and that's mostly what I'm doing. Aussie Swiss, still stacked up positions here. I've got buy limits and buy stops above. Yen showing weaker Aussie. Let's go currency strength today. Japanese yen weak to strong. Aussie weak. Yeah, I mean 25 and 40 is not a lot of volatility today. The Dow, which is down, but it's paused on the day. I mean, it's flat. You can US 30s thrown in with S&P. It's like we're down like 1% with a gap lower. That's pretty much it. Aussie New Zealand. I'm still looking for Aussie New Zealand to see if we will maintain a slight uptrend and a channel into these highs. So pullback. I may look at another bounce on Aussie New Zealand. It's just going to be a grind. Timeline horizon for what? Indexes? I'm looking all terms, like short, medium, long term. Right now, we're dealing with a lot of like short term is probably, maybe a short term recovery to a near to medium term. Like I think April might be like another leg lower initially, and then it kind of catches itself and moves higher. I think there's a decent seasonality to the market, for April, May, June. It really depends on like how severe these tariffs are coming out in April. Like the market doesn't know. I think a pullback towards like the slide of a high, low, markets down, X percent, right? Dow's down like what, 7-8% from the highs. So the US 30 down about 7-8%. If it pulls back to a 50% area, that's a good spot to be de-risking, deleveraging. And if we go another leg lower, I want to be ready for that. If we go higher, pleasant surprise. But I think the bulls and bears are going to sit and kind of force us to we'll kind of wait and see whether the market is capable of going higher. I'm a little skeptical on the higher. I think this market's going to struggle to get to all-time highs anytime soon. If it gets all-time highs soon, freaking great. I'd love to see all-time highs, but I'm not counting on it. Okay, Aussie dollar, I'm out of that trade. This one closed out for profit. I had 2 longs and I had 3 longs. Closed out 2 winners and took a small loss. Aussie CAD, still liking. CAD Swiss, leveled in. Buy limits, buy stops. CAD yen, don't care. Swiss yen, don't care. Euro Aussie, be careful on this stuff. This is a weird move. So if this is a swing, is this going to go back up and retest the highs and then fall? If we have some severe risk off trading, is this going to just continue to head higher? I don't know. This is really volatile. Be careful. Trade with confirmation. If this is a high, low, lower high, if it breaks this low, this is a cup and handle pattern. So if we break the low, there could be, nice thing about technicals on Forex is it's very efficient. So if we break this low, we probably have a pullback at least towards the 50% zone. So take this low to high. And if we break this low here, then we can go back into about that. That'd be a break of around 7,100. And we could go back to around 6,900. So there's some scalping opportunities in there with the break. If you want to look a little bit tighter, then you're looking to see if there's a rollover, get some confirmation stop loss above, and you can go after 6,900. So either this thing turns to break these lows or we come up to a equal high and you can sell nice and high for a range trade. But, you know, take the higher time frame structure, go down to a smaller time frame for some precision and see if you can find something. EuroCAD, this one hasn't pulled back yet. This one could be a pretty good one as well. High, low. If it pulls back for a lower high, you know, looking for another chunk. Take this low, take this high, find your equilibrium. Probably a good spot to look for some near-term profit. I don't mind that trade. Euro Swiss, same thing on the other Swiss crosses. I've got levels on both sides. But I'm just buying it. I'm buying Euro Swiss. Euro Pound, no trade. Euro Yen, no trade. Euro New Zealand, be careful. Like I said, Euro Aussie. Watch your equilibrium levels. If we pull back for a lower high or pull back for an equal high, shorter time frame confirmation, watching that. Euro dollar, little bit of a pullback on euro dollar. It's not a surprise. Dollar index is looking to rally. Euro dollar may be pulling back into these inefficiencies. So I could see euro dollars doing this, pulling back, pulling back, pulling back. Okay. So if anybody's short euro dollar right now, maybe at this equal high, I would put a stop loss into break even. I wouldn't be messing around with this trade. If it goes a little bit lower into these inefficiency candles, then trailing a stop. Not crazy complicated. But this is also pretty well supported. If this is a zone that gets picked up by the bulls, you know, looking for something bullish to come out of here and see if this market wants to head back up to 1.12. A weaker dollar seems to be the plan of the Trump administration. The weaker dollar is also likely going to help bring down the yields in some capacity. Maybe the 10-year yield, maybe the 10-year yield, maybe not. But that's at least part of this initial pain plan with cutting fiscal spending and taking away some of the punch bowl. Pound Aussie back up to highs, no trade. Pound CAD choppy, maybe a resistance level up here with this low to high. If we have an equal high resistance, smaller time frame could be a pretty good trade to find some equilibrium. Wouldn't be a bad trade if you're watching between higher time frames and lower time frames. Pound Swiss, I'm still hanging long on this one. Pound yen, no trade. Pound New Zealand, be careful. Pound dollar, just to pull back into these candles here. So a little pullback into these candles. Again, if it stays bid, maybe another chance to watch a weaker dollar. There's a pocket up here. Is it possible that the pound dollar runs back to 3,400? Maybe. But I like pound dollar a lot less than euro dollar. I think euro dollar is a cleaner read right now than pound dollar. New Zealand CAD, same thing in Aussie CAD, just sticking with this range. I'm long. I like this trade back up to highs and highs. If it comes back to lows or lows or lows, I'm just going to buy more. Range trade. New Zealand Swiss leveled in. New Zealand Yen. I mean, it bounced off the lows like we talked about. I didn't take any trade on it. I don't like the negative swap, so no trade. New Zealand dollar close out for a 30 pip loss, and then these two combined, the total pips was 290 pips between the three trades. That trade's done. Dollar CAD, who cares? I don't know what's next. Maybe this structure here, high, low, little indecision. Does it break? I don't know. Maybe if oil gets a bid, then sure, maybe the CAD gets stronger. I just don't see a lot of reason for the CAD to get too much stronger unless it's just all dollar driven. If you want to see dollar weakness, euro dollar is probably the best trade right now for dollar weakness. Dollar Swiss, no trade unless we come back into this area. I want to say 86, 85, 84. I'm just going to buy and try to trade the range. Dollar yen, no trade. We'll see what this one does. If this is a topping pattern, then any type of swing pullbacks, looking for that trade. But I'm not going to trade the dollar yen. I'm going to trade FXY, and I'm going to trade 6J for that trade. So this is Japanese yen futures. This is an ETF that follows the Japanese yen. I don't want to trade Forex, not with the Japanese yen. Negative swap is a pain in the butt. I'd rather trade positive swap and get 3 to 4% on the currencies that I'm holding because of the interest rate differential. Plus, the Swiss Central Bank cut rates this week to 0.25%. So one potential outlier for 2025 before we go today is the Bank of Japan might still be looking to raise rates. Might. And if they do, they are going to be one of the only central banks that would be raising rates. So take a look at this chart, and this is like your G20s. So let's look at any of these major central banks. Okay. Japan is the only green arrow. Okay. Everything else is down, which means the entire world of central banking is cutting rates right now. Japan is not. Now, this conversation wasn't nearly as important as going from negative 1% or negative 0.1% to 0 to then plus 0.1 to plus 0.25 to now plus 5, plus 0.5. I mean, they have raised rates multiple times. And so even at, 0.5%, it's like, is the next step 0.75 is it 0.75 to 1%? If they are on their way to 1%, and this is the only central bank that is doing this, here is your curve of positive interest rates to negative interest rates. The Bank of Japan was here for a decade, and then they got to 0, and then they got to positive, and then they're moving. So they're going this way. Japanese yen, Bank of Japan is going up. Most other central banks that raise rates are now coming down. So I do think that that takes away a little bit of the attractiveness of this carry trade that has been so prevalent, popular the last couple of years. So I don't know if and when this happens later this year, if they raise rates again, if this starts to be this potential risk like we saw last summer, which was the Japanese yen deleveraging. So I'm just putting that on the radar this year. That could be a reason for the Forex market and maybe even the stock market to show some heavy amounts of volatility in 2025. Bank Japan is a wild card, always. I think Japanese yen is either traders are loving it so much because they've made tons and tons of money on it, or traders hate it absolutely because it doesn't make any sense technically. Like, it is more of a sentiment, irrational currency pair to me than it is a technical one, because when it moves forever, and it feels like it doesn't want to rebalance, and it does eventually. So I still believe in the technicals, but you wait sometimes 6, 9, 12 months for technicals to rebalance. And if you're caught on the wrong side of that move, you hate your life as a currency trader. So don't be on the wrong side of the yen crosses. Easiest way to avoid that is don't trade them. So the way I'm picking my battles is define risk with no negative swaps, and that's why I'm trading, FXY and 6J. So, all right, I'll wrap it up there. Happy Friday. Have a great weekend. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.